So here's a quick YouTube analysis video on St. Ives. Yes, here we have them. The lads who crashed quite significantly over the past few days in particular. If we have a quick overview, we can see they've crashed from a high of I think 120. I just need to look on this historical chart before I can verify quickly, but internet's a bit slow, bear with me. So here they are. They fell from 129 to 74 now, and they've been drifting since their 80 close on the day of the crash to a drift of 73, I believe now. Yeah, this is what they're at. So from their crash day close, they've fallen a further 9%, and it's been 43% just alone during the past 5 days from peak to bottom, which is the level they're at now. And the problem I've had with this company is when they crash, they tend to drift a bit more and don't stop falling for quite a long period. I had experience with them back when they fell 44% in the same scenario in April, which I remember now. And I ended up selling on a 3-4% loss around break even, to be honest. But I had no problem with it. I was irritated. It had no liquidity, similar to now. But then it drifted down. One day it had bounced 4%. And people got excited, although I chose to stay off it. And then for the 3 months following that, it just consistently drifted. No levels in which it bounced off. You can see the highest bounce was probably 4%, and that was over a few days. It just fell another 40%, another 40 odd percent. Then it began a rebound of 73%, up from that low to a high within a month, which is an easy return. So say now it drifts down another 40%. You take a 40% of 78 in particular, you have your 8 as an estimation, 32. You have it in the 40s. But that's unlikely, isn't it? Because the market value of this company has fallen from the tune of approximately £360 million to 100 million now. There's no way they could go lower, right? With their current financial reports, if I get to here, they have significant revenues, they have okay debt, they're a good company. The only problem is that they've been on the decline with orders as supermarkets have been cutting budgets. But that's not something that's going to sustain for long. Although this market pattern here is quite worrying, that it'll slowly drift 40% down and then rise, that's only potentially a one-off, unless we see it break certain levels, which I particularly view it to not bounce off. So if we follow it in this scale, the current fall from the 5-day chart was that 80 peak close to now is 9% approximately. We go to the 1-year chart and we find something similar. We see that peak to 9%, 8.75, exactly there, 100.14. So we see a further fall from there of 29.35%. It seems weird that it's symmetrical, but has this been played out in the 80 bots by the market makers or the traders, the big institutions trading this stock up and making significant returns on the rise, rather than, a few percent down each day, very little up when it is up, and a boom, boom, boom. The main cause to the decline, though, was the UK economy's uncertainty during the Brexit period. But since the Brexit period, the UK economy's had quite a recovery and beyond, I think 25% above where it was pre-Brexit, Although we can't directly link these two companies together, their marketing strategy hasn't had as much customers during then. The printing business is being outdated by the use of electronic books, ebooks, kind of shown in the film, what was it? Why Him? That's it, with Dave Franco. It's a pretty make-believe film, but it kind of relates to the printing business. However, these guys aren't just paper printing, they're a proper printing business with customers and a significant backlog of orders. Their revenues are on track, but we'll just have to watch how this goes. I'm going to target 62 to 68, just on that second support level, as you can see kind of on this trend. If it goes to the third support level, I'm losing 20%. If it doesn't, I'm making 50 to 100%. So I'm going to target my positions there, potentially in order. If not, I can see this rising possibly on Monday. If it doesn't, then it's signaling a consistent downtrend towards my entry levels. So I'll keep an eye on it. It's in the watch list. And I think, hey, it's not an outstanding company, but it's not a horrible company. And it is something that if you're going in with a significant amount of money and want to make a small amount of money easily, you can predict it. Certainly much better than these high fluctuations and market manipulation on many small caps. But I don't know, this is the only thing out of small cap that I think is comfortable currently. And not significantly overvalued. So it's a weak sell in the long term. That's been an episode of YouTube Analysis, and I'm out. Take care. Keep senseless.